So the mining pod is announcing a strategic pivot. We are actually going to be focusing on Will Ferrell comedies from the 2000s, and including his lesser known ones where he was just a secondary character like Wedding Crashers. No, but seriously, welcome to the mining pod, y'all. This is a flash live stream on Q2 earnings for public miners. This is brought to you by Clean Spark. We're going to be going over financials and infrastructure updates for Mara, Riot, Clean Spark, Cypher, Hut 8, Bitfarms, Wolf, and Core Scientific. We're going to try to keep it quick because we got a lot to go through. So thanks for tuning in, y'all, and we will kick it off here in a second. But first, Will, how you doing? It looks like you've got a pretty cool studio over there.
Yeah, I'm at the PubKey studio here in West Village, New York City. Just did a great podcast with James McAvity on basically 51% attacks. We didn't talk about the Monero thing that's happening right now, but we did talk about Bitcoin mining security budget, that somewhat tired conversation, but like in a new light, given that James has a great footprint in the mining space, runs a pretty profitable private miner. So he's got a great perspective on it. Expect that podcast in the near future. But I'm excited for today's show. We've been covering the quarterlies, Colin, for all these Bitcoin miners. We got some July production updates in there as well. And we're going to go through them over the next hour, probably hit like 5 to 10 minutes per major miner. As always, you can go to blockspace.media and read these as well. And as of last month, we're on Yahoo Finance. So if you go to Yahoo, click in like your favorite ticker, like CleanSpark or Riot or whoever, and you can read one of our articles on their quarterly updates. But otherwise, I think we should get right into it because, as you said, there's a lot to cover.
Yeah, so we'll start with Mara, and we're only going to go over a handful of metrics. I think the ones that are probably the most salient in terms of, like, we're not going to go over like Bitcoin HODL or Bitcoin production. We're just going to be looking at things like revenue, hash cost, cost of revenue, SG&A, and hash rate. So starting with Mara, Mara's end of quarter hash rate was 57.4. The average hash rate, assuming the installed, was 57.7 exahashes over, or 0.7 exahashes over the quarter. They were shuffling some rigs around. We're not looking at actually utilized hash rate. I didn't have time to back out those numbers, but the revenue kind of tells you the story there if you look at the numbers well enough. And Mara pulled in 238.5 million in Q2. Cost of revenue was 133.11 million, and SG&A was 38.29 million. For SG&A, I do not include stock-based SG&A. So if you look at a lot of these miners, the stock-based SG&A, if they include that in their SG&A, it's typically higher. I just look at cash costs, though. And Mara's hash cost for the quarter was $36.16 per petahash per day. And they have significantly decreased their cost structure over the last few months. They've been moving towards a fully owned model versus the asset light that we saw dominate them for the last few years. So that's really helped improve their hash costs. And considering how big their fleet is, the cash-based SG&A is not too crazy. Cost of revenue, pretty high. And part of that is because they still have about 30% of their fleet in hosted facilities. So that's going to have a higher cost than the ones that they operate themselves. So that's the breakdown on the metrics. Like Will said, you can find a written breakdown on our website, blockspace.media, to learn a little bit more about what was going on over the quarter. But unless you have any comments there, Will, or anything to add, we can go ahead and move on to production update or infrastructure updates for Mara.
Yeah, I'll go to this Rosenblatt buy rating after we do the infrastructure updates.
Cool. So yeah, for infrastructure updates for Mara, I've got my notes here on the other screen. So apologies, ladies and gentlemen, for my wandering eyes. But right now they have 1.7 gigawatts of contracted capacity. Not all of that is utilized. That's something that's worth noting. And it seems like right now they didn't really have much in their presentation for what their immediate expansion plans are or what they're working on. But I'm going to go through some of the sites and how much capacity they could increase. Currently, Granbury is at 232 megawatts. The total nameplate capacity is 300. They have the opportunity to expand there quite significantly. Garden City is another one that has a lot of expansion potential, 126 megawatts operational, 200 nameplate. Hannibal, Ohio is 41 megawatts currently. That can expand to 200. in Hansford County, Texas. This is probably the biggest one that I'm going to zoom in on for the rest of this segment. Currently, they're utilizing 0% of that megawatt potential at that site. This is the wind farm they purchased recently. They have the ability to expand to 180. And in terms of near-term expansion, it seems like that's the place where they will probably start. At least that makes the most sense to me for what they're going to try to do over the coming quarters. And the interesting part about that too is that has an optional expansion to a 240 megawatt interconnect with ERCOT. So for those who've been paying attention to this site gives Mara some flexibility with regards to whether or not they want to mine on that site or sell directly to the grid. So they're going to be able to play the power markets with that. It's not huge in the grand scheme of things. I mean, 240, if they actually go up to that optional expansion, that's quite a lot. But in the grand scheme of their portfolio, it's only a small portion. So that power play is not hugely significant, but it is interesting considering we don't see very many miners trying to own energy assets outright. It's like Mara, I think, and Bitfarms. It's one of the only other ones with their Pennsylvania coal-fired plants. So the other big thing that I want to touch on, then I'll toss it over to you, Will. They spent a lot of their presentation talking about in terms of strategic growth. They want to focus on working with governments, basically. So similar to their UAE deal, where they have these Bitcoin mining sites in a JV with the government over there. It seems like that's where they're going to try to expand in the future. They're less interested in owning assets specifically in the US, and they want to try to strike these JVs with sovereigns around the world. They also have been intimating at using some of those sites to have basically, I guess you could call it like an energy sponge for inference data centers. They don't want to get into AI. They've said this multiple times before, but they have mentioned that they are interested in trying to co-locate Bitcoin miners at some of these data centers to be able to soak up some of the megawatts that are not being used for inference for AI. So just quick update there. Kicking it over to you.
Yeah, and I'll pull this down from screen. Just go back to us. They did have the announcement yesterday with a subsidiary of a French company that they just purchased an interest in, or they have the ability to purchase an interest in. The language in the press release is pretty crazy, but they do definitely want to get into more of the infrastructure game for AI. We haven't really heard much of a 2PIC update in a while, and I've yet to hear of anyone purchasing it. So I'm curious if we're going to get any more information about that in the near future. I did not see anything in the quarterly, so I'll look back at that as we go on to the next miner and see if I can find anything on the 2PIC solution they talked a lot about this year, because I'm curious about that. The thing
can you break down the 2PIC for what people don't really know what that is?
Yeah, 2PIC was a new two-phase immersion solution that Mara started pushing out. They built a whole sales team internally. They built the construction for it, and they basically launched it a little over a year ago at the Digital Wildcatters conference. Specifically, they saw this sort of being part of their vertical integration play, right, where they're able to not only own a wind farm, own the Bitcoin miners on the wind farm, own the Bitcoin that they generate, but they'd also start building some of the infrastructure. That's why they had the strategic investment in Auradine, Bitcoin miner, and which we've done some podcasts on. Go check those out. Just search Auradine on our podcast feed and you'll find it. It's Aurdine. And then they had this two-phase immersion solution. Basically, the idea is like, hey, we can be more of an infrastructure play in between, not just an ASIC and not just like a container, but also like where it's like sitting on the rack. So they had the Auradine units in there. Two-phase was like an interesting choice because a lot of Bitcoin mining is single phase. You don't really see two-phase out there. There's a lot of more technical issues with two-phase, and that's why it's been kind of pushed out of the industry. But they saw the two-phase as important given the possibility it's used for AI. We haven't seen any contracts for these, however, no contracts to my knowledge publicly. So it's been about a year. They pushed the manufacturing for it. I'm curious if there's any updates. I'll go back to the quarterlies and double check, but I didn't see anything so far. I'll go to this Rosenblatt update. Rosenblatt reiterates buy rating on Mara, sees 20% upside. Quote, Mara shares ticked up for most of the trading session after Rosenblatt Securities reiterated a buy rating and maintained a $20 price target following the stronger than expected Q2 results, driven by a 30% rise in Bitcoin's price and expanded non-GAAP gross margins. Rosenblatt highlighted record revenues of $238.5 million, 6% above estimates, driven by a realized Bitcoin price rate of $100,700 versus $94,900 forecast. I think this just goes back into basically the model that we've seen Mara be pushing, the twin turbo engine. If you look at their marketing, you'll see that a lot. Mine Bitcoin, buy Bitcoin. Bitcoin goes up, the market cap of Mara goes up. If Bitcoin goes down, it's going to go down as well. They're very tied at the hip to Bitcoin price, whereas a lot of other Bitcoin miners right now are looking at AI stuff. That being said, we did have the announcement from Mara with the French subsidiary that they're getting an interest in, so maybe that changes. I don't have much more. Happy to give it to you or go on to the next miner.
Yeah, one last thing to note, and then I'll hop into the next one. In Q2, or in H1, 2025, Mara received about $73 million worth of Ordyne machines from that ASIC manufacturer. So for those that don't know, Mara invested quite a lot into Ordyne. I believe it was like somewhere around $30 million in some of their fundraising rounds. And Mara did this strategically so that they could have a say in the manufacturing process for some of these ASICs, also for some of the firmware design for them. So just a quick note on that. It's going to be worth paying attention to how that impacts Mara's operations in the sense that we don't really know how reliable these miners are. I've heard good things from some miners, I've heard iffy things from others. So we'll know, I think, over the next few quarters whether or not that investment paid off for them. But we'll go ahead and move on to Riot here. So Riot's end of quarter installed hash rate was 35.5 exahash. Their average hash rate over the quarter was 34.9 installed hash rate. They had revenue of 153 million. Cost of revenue was 91.04 million. And SG&A came out to 45.78 million. And they had a decently high hash cost over the quarter. It was $45.04 per head hash per day. I did not include their curtailment credits over the quarter, which was about 8 million. So if you add those in there, that hash cost goes down a little bit. And in regards to cost of revenue, they had about 12.3 million in legal fees and professional fees over the quarter. I'm not sure if this relates to ongoing litigation with the Rhodium suit. I know they settled some things there, but there's some kind of mop up there, I believe, and some other things they had to spend money on. So that increased their costs just a little bit. And specifically, if we're looking at Bitcoin mining, because they do have their engineer line and they have other forms of other streams of revenue, they earned about 140.9 million from BTC mining itself. Moving over to the infrastructure updates, we can look at a pretty, decent progress for them, at least in trying to lay the groundwork for this AI and HPC pivot. So they are going to look at turning Corsicana's phase 2 into an AI and HPC data center. They hired Jonathan Gibbs as the chief data center officer last quarter. They also acquired an additional 238 acres at Corsicana, so now they have 858 acres there for expansion. And they also established, or are working on establishing, a water line in Corsicana, which is going to be super important for having liquid cooling for some of these AI and HPC chips once they get a partner for that. And that is estimated to be completed about Q2 2026. So I think that's one of the more interesting things. And once they get this in, they're going to be able to reduce their costs for cooling those machines. And they have a lot of the stuff that they need on site to make sure that they can have a successful operation, assuming that they can get a partner for it. In terms of Bitcoin mining, they are growing their Kentucky facilities from 65 megawatts to 127. The ETA on that, I believe, is rolling over the next few quarters. That'll be the majority of their hash rate expansion going forward, because they are focusing specifically on HPC and AI for the rest of Corsicana. They've even hinted at maybe retrofitting phase 1. And if they're successful with these retrofits, going on and even retrofitting Rockdale. So going back to this theme that we've seen, a lot of these Bitcoin miners are soft pivoting or even hard pivoting into AI. And they have 600 megawatts to build out at Corsicana, like I said, for that AI and HPC. They're estimating that they're going to have to spend about 201.6 million in capex for the rest of the year, and that can be fully funded based on the cash they have on their balance sheet right now. Doesn't mean that they won't continue to dilute. Doesn't mean they won't look for other fundraising options like through debt markets. But if they wanted to, they could fund that expansion for the rest of the year with what they have on their balance sheet.
Great update. Yeah, we had Jones Research come up with a nice price target for them. I'll pull that up in a second. Just looking at these numbers here, and if you're listening on audio later, I'll read them off to you. But looking on the screen, you can see the nice increase in hash rate. This is the quarterly, plus 5%. Bitcoin mined down 6.8%, I believe, over the previous period, or it might have been over the year to year, excuse me. But that's, still pretty solid, I think, overall, like seeing that the hash rate growth and then seeing like the Bitcoin growth here.
And curtailment definitely impacted that, right? So they're making up those costs in a way with power credits that they can use to reduce their power. So
yeah, I think when you see like Bitcoin dropped in mine per month, it's like not factoring in other competitors on the market at a given moment. And then also the curtailment's a big part for their strategy. No change in megawatts under management. That's been pretty consistent. Obviously, they have a huge amount of energy that they're building out right now between the two sites. I think it's just like a really solid update from them. And I would just say, I think people have been waiting for this update to happen for a little bit. And looking at Riot's stock price, which I'll throw back up here on this tab, things responded pretty well over the last few months to Riot. Like July was definitely a great month for them. And beginning of August, we saw drop in a lot of stocks. So it's been kind of hard for everyone to stomach, and we're getting back towards like that place is traded for a while. It's trading at 11.45 as of today. But yeah, we had that joke for a while. It was like Riot's the $10 stable coin that was circulating around Twitter. And I think we're definitely out of that territory now because they've been more aggressive. They kind of got the pieces in place to start getting the AI HPC narrative going. And then they're also seeming to be making some strides on the Bitcoin mining front where, they did have some operational issues, shall we say, with the hash rate for a little bit there. And I think we got some kinks resolved. So I don't have much more on this. See if I can find the Rosenblatt piece, or maybe it's the Jones one, and I'll let you keep ripping on it.
Yeah, I think the uptime thing is worth mentioning. It seems like last quarter, even with the curtailment, their uptime was improved from what we've seen in the past. A lot of investors were pretty frustrated by like unexplained downtime that was not related to curtailment, and they've still got maybe more than some would like to see, but their actual utilization bumped up over Q2.
Yeah, this is from Jones Research. It's part of Jones Trading, investment bank in the space. So we started covering a little bit more closely, and they see a 55% upside on the share price here, which basically brings into account all the standard metrics you'd want to see, like the EBITDA and things of that nature. But pretty solid $18 price target for them, and they're trading at like $11. So there's definitely more interest in the stock than I think I've seen since last cycle, to be honest. The Riot rhinoceroses, as they call them, are in a bullish position if you are into the price talk. But that's all I got.
Yeah, one thing, let me see. Did Jones have anything interesting to say about the potential for Corsicana's HPC pivot? Yeah, I'm going to read this paragraph. And it's some of the parts evaluation, Jones Research assigns the Corsicana 600 megawatt built to suit lease an equity value of 4.11 billion to 6.71 billion. So this is again the biggest question mark with a lot of these pivots. We saw Core Scientific obviously get a good tenant with CoreWeave. We'll be covering that in the acquisition here in a little bit. But the biggest question mark with a lot of these miners and a lot of what investors are waiting for is like, do they actually have tenants that are high enough caliber and worthwhile to fill these spaces? Obviously, they have some talks underway. Otherwise, I don't think they'd be doing this. But that's just one of the biggest question marks hanging over the head of some of these companies. All right, let's move on to CleanSpark. So going over the numbers for CleanSpark, and just again, a few points for those who just joined us. For hash rate, I'm citing installed hash rate. This is not utilized hash rate. And I'm also looking at SG&A minus stock-based compensation. So for CleanSpark, 50% exahash installed by the end of quarter. Average hash rate installed over the quarter, 46 exahashes. Revenue came in at 198.64 million. Cost of revenue was $90.13 million. SG&A was $30.82 million. And hash cost was $31.06 per petahash per day. So overall, pretty strong quarter for CleanSpark. We saw SG&A come down a little bit, hash costs improve marginally, and seems like they, for one of the last defenders of the pure play mining, it seems like they're really getting things going over there in terms of trying to make sure those costs stay in line with their expansion. And speaking of expansion, we'll hop over to that really quickly. Not too much on their front. I had to go back to the Q1 presentation because the Q2 one is not live. Or I had to go back to the Q1 presentation. The Q2 one did not have too much information in it. You can go check that out on our YouTube if you would like to see the full earnings call, by the way. Currently, they have 950 megawatts contracted capacity. The current focuses for expansion is they're looking at expanding the grid sites in Tennessee. So CleanSpark acquired grid, I believe, last year. And that's where they will be putting the majority of their expansion in the Southeast, the focus there. And then for other sites for expansion, they are evaluating some sites for immersion in Wyoming. So pretty interesting portfolio. The majority of their hash rate is still in Georgia, but they've also got significant in Tennessee, and they are building out their presence in Wyoming as well.
Love it. I mean, obviously, we'll get to the leadership shuffle in a second here and talk about that. But I think from just a production number standpoint, continue to be a top 3 miner in terms of efficiency. That's been pretty normal for them for the last few years. Bitcoin mining growth, getting to that 50 exahash operating at the end of the month, I believe it was in July. Correct me if I'm wrong on that. And then just like continuing to ratchet it up using the 5 sites that they have. On the HPC AI side, that we did see in their quarterly updates that they might explore that a little bit more now. So especially under a possible under the leadership shift that might change. We have yet to hear like a signaling from their management if that's the case. But it was noted in their quarterlies that they are certainly looking at it. I think analysts over the period have been interested if CleanSpark would be willing to use their portfolio of energy to do that. They have a slightly higher cost of energy than some other peers out there. If you're an AI HPC, it makes a little bit more sense because there's a higher premium for all the megawatts you're using, obviously. So there's a few questions around that. Do they pursue that? Is there a new change? Are they going to keep the sort of mantra they've had for the market the same as they've had a little bit here? And then contracted power tops 1 gigawatt. They join, a few others, small class, but a few others that are getting to that 1 gigawatt size, which is pretty impressive. I don't have much more on that side. We can go to the other major CleanSpark story, obviously.
Yeah, let's touch on the CEO shift.
Yeah, so we found that out yesterday. Oh, it was today, Tuesday. Yeah, I'm blanking what day of the week it is already. We found that out on Monday that Zach Bradford of CleanSpark had resigned for family reasons, and Matt Schultz will be stepping back in as CEO. He was formerly the CEO when the company was co-founded between Zach and Matt in 2014, and they transitioned to a Bitcoin miner in 2019 or so. Since then, they've become, one of the top 3 Bitcoin miners out there. It used to be a space with just Riot and Mara, and then they broke into that top 3. Over the last 2 years, we really saw them grow in 2023. That was kind of like the year of CleanSpark, and then since then, it's kind of like settled, and we've had Iron, CleanSpark, Riot, Mara. Maybe you could throw in another one in there. So we've had a little bit more of a mix. I'm excited to see what happens maybe in a leadership change in terms of like the conversation points. There've been a lot of the pure play mining, which obviously we love as a Bitcoin mining podcast, but maybe they pivot more into AI HPC. Maybe they keep the same. Whenever we see leadership changes, we obviously see some signaling to the street change a little bit. That's kind of thing that keeps me interested with the story. How about you, Colin?
I mean, yeah, I think that's just the biggest thing to key into with this leadership change. Will they stay the course with Bitcoin mining, or will we see them go the way of their peers and decide to jump into AI and HPC? So nothing really to add. We can hop on over to Core Scientific if you're ready.
I am ready. I'll pull up the chart here.
Alrighty. So Speaking of AI and HPC pivots, obviously Core Scientific front and center, the pioneer in this, and their Bitcoin mining financials kind of reflect the fact that they are not caring about this anymore. They are currently under they're currently undergoing negotiations for a buyout from CoreWeave. Some kind of bumps in the road, which we'll touch there in a second on the infrastructure updates. But as it stands right now, Bitcoin mining not front and center for them, but we'll go over the numbers. Average hash rate was 17.6 installed for at the end of the end of quarter hash rate was 17.6 exahashes installed. Average was 17.85 exahashes installed. You can see, tapering off a little bit there as they focus less on it. Revenue was 78.63 million. That includes their hosting contingent as well. They have a few exahashes hosted. Self-mining revenue was 62.42 million, and the cost of revenue was 73.6 million for all of their revenue. And for Bitcoin mining, self-mining, it was 41.53 million. And if we look at SG&A for the quarter, it was 44.64 million. Again, that's excluding stock-based compensation. And that puts their hash cost at about $56.77 per hash per day. Not surprising. It's one of the largest of the bunch, but they have not been focused on improving their fleet efficiency. They're just letting the miners that they have rip. So we should expect it to be a little bit higher as a result. And yeah, I just think the biggest story here is going back to the CoreWeave acquisition. What exactly does that mean for Core Scientific's Bitcoin mining capacity? Does that get peeled off? Does CoreWeave sell it? Do they gut it and try to retrofit those as well? But that's kind of it on that front. In terms of infrastructure updates, there's not much to report because we're going through the acquisition process right now with CoreWeave. So obviously, Core Scientific is not focused on expanding. Prior to that, they were, all gung ho about these pivots and these retrofits they're doing for CoreWeave. But as it stands right now, nothing in the pipeline. Again, just biggest question mark: what does CoreWeave do, assuming the acquisition goes through, with those Bitcoin mining assets?
What's going to happen? Who's going to buy them? There's a few large private companies that are trying to roll up assets in the Bitcoin mining space before they possibly go public. So I'm keeping an eye on a few names in that space to see if they purchase those assets from Core Scientific. But I don't want to get ahead of our skis. We don't know if this is going to go through, and there's a lot of reason for this deal not to happen. So I'm going to share this story here. Core Scientific's largest active shareholder to post CoreWeave deal. We wrote this up on August 7th, so about 5 days ago. This continues to be ongoing. Quote, the largest active shareholder in Core Scientific, 2Cs Capital, will vote no on its pending acquisition by AI neo cloud provider CoreWeave, according to a press release from the investment manager. The firm said the acquisition terms, an uncollared all-stock exchange, leaves Core Scientific investors exposed to CoreWeave share price volatility without price protection. Continues to say, 2Cs says the consideration materially undervalues Core Scientific and unnecessarily shifts economic risk to its existing shareholders. It cited the roughly 30% decline in Core Scientific's share price in the days after the July announcement as evidence of broader investment concern. So you can see here the 30% decline they're talking about is like this pretty large sell-off after the deal was announced. Feels a little bit unfair, but I think what we can look at if we go back to this tab of the Core Scientific share price is that it is very tied to CoreWeave. CoreWeave has been going up over the last few days as some of the AI deals have been sputtering out in like the larger tech market. And CoreWeave and Core Scientific, as of now, are closely tied. Core Scientific is kind of like a cheaper way to get exposure to CoreWeave, and a lot of Bitcoin mining investors don't care about that or don't want that, and so I think that made them unhappy. And there's also like the point here, like it was uncollared in an all stock deal, and so like one drops, Core Scientific's going to go with it. That did not make people happy. So I'm unsure if it's going to go through. I think that you could see a large amount of the shareholders vote no, and then what we would see is probably an adjustment of the purchase bid. We did a podcast talking about this, so people can go back and look at those podcasts around the Core Scientific deal. Overall, huge win for the Core Scientific team. They said no to a deal a year ago for $1 billion. They got a deal across the line for equivalent $9 billion deal. So 9x in 1 year is crazy, especially at the dollar figures we're talking about. Infrastructure play, my understanding is they did not do Q2 recording, but they did put out Q2 numbers, right, Colin? You just kind of went over there.
Yep.
So they didn't put the Q2 recording out because they have this deal ongoing. They decided not to do like the call. So I don't have much more on there. We'll see what happens. This deal comes to vote pretty soon here. I believe it's early September. So all eyes on that.
Yeah, just two things to zoom in on. 2C's Capital is the largest active holder of Core Scientific. You're probably wondering, well, hang on, what about BlackRock and Vanguard? Well, they hold Core Scientific as part of index funds, so they're not considered active investors. 2C's is cycling in and out of that position depending on where they feel Core Scientific is going, and they're not holding that for investors in those funds. The other thing, too, going back to the uncollared part, that is kind of 2C's whole argument here. The Core Scientific CoreWeave deal stipulates that for every 8 shares of Core Scientific, investors will receive 1 share of CoreWeave, and a lot of investors and analysts were a little bit, nonplussed or upset's maybe not the right word, but maybe upset a little bit about the fact that this was an all stock deal. They would rather have seen it be in cash, and so that's a lot of the pushback from them. But that's it on my end for just appended notes. We can move on to Cypher.
Cash is king.
Cash is king.
So I get it, but go ahead.
Yeah, thanks. So Cypher, a lot of interesting stuff going on with them with regards to their own AI and HPC pivot. We'll get to that in a second. But for the numbers, end of quarter hash rate installed was 16.8 exahashes. Average hash rate was 14.6 exahashes over the quarter. Revenue was 43.57 million. Cost of revenue 15.33 million. SG&A was 9.08 million. One of the lowest SG&As of the miners. You really like to see that if you're a Cypher holder. And I'm not going to cite the hash cost that I have here because I didn't account for the JVs that they have. Two of their sites are JVs, and so I don't want to cite an inaccurate number. But their hash cost is because of that low SG&A, because the cost of revenue is also pretty low. They have good power, and because their fleet efficiency is pretty low, one of the lowest in the game at 20.8 joules per terahash. Their hash cost is very attractive compared to their peers. But who knows? Maybe they're not mining in a few years because they are going in hard on these AI and HPC pivots. Like many of these miners who are pivoting, they don't have or have not announced at least a core or an anchor tenant for those potential AI and HPC sites, but they are working to build them out. So if we look at those infrastructure updates currently, Cypher has 477 megawatts under management. They have a total of 2.6 gigawatt potential capacity with all of the sites that they are looking to develop. The principal ones here are Black Pearl Phase 2, Barber Lake, and Stingray. They also have about 4 others that are way down the road. They haven't even acquired these sites yet, or haven't at least announced their PPAs or whether or not they are in the queue for those. But currently they are putting 150 megawatt expansion in Black Pearl. That's the phase 2. They also are looking at a 300 megawatt expansion for Barber Lake. These are approved capacities, so they have not built anything out yet, but that's in the pipeline. And they have 100 megawatts approved for Stingray in 2026. And then for the other 4, they've got 70 megawatts, 500 megawatts, 500 megawatts, and 500 megawatts. Again, these are future growth way down the road. These are just perspective. There's nothing major going on there with those updates. So, for Cypher, we had a good pod with them that we recorded in Vegas. It made me pretty optimistic about where they were headed in terms of the AI and HPC pivots. But I think just the biggest thing is so far we have not had any major announcements for them exactly on who would be occupying that space. But they are starting to make moves accordingly in Black Pearl and Barber Lake as well.
Definitely. I mean, super strong quarter for them. This has nothing to do with analysis of the company and all, but I do love like the Twitter crowd does like Cypher a lot. Cypher Girlies is what I've been seeing from Bitcoin Bella, so shout out to them. From a stock price perspective, we got as high as like $7, but we're turning back to 472 again. That drop over a period just like coincides with a lot of people dropping.
Yep. Ready to move on?
I'm ready to move on. I don't have much more.
Blowing through these. We've got Bitfarms, Hut 8, TeraWolf left. So like I said, we're trying to keep this tight at about an hour, and I think we'll be able to get within that window. So we'll go ahead and go over to Bitfarms, and then we'll do TeraWolf. We'll save Hut 8 for last because they're peeling off their mining contingent with American Bitcoin. So for Bitfarms, Q2 end of quarter installed hash rate was 17.7 exahashes, average hash rate 18.6 exahashes over the quarter installed. And again, this reflects their own AI and HPC pivot. They're starting to taper off some of that capacity as they look at expanding their Pennsylvania sites for AI and HPC. Revenue came in at 77.8 million, cost of revenue 46.19 million, SG&A 17.81 million, and hash cost came in at $41.07 per petahash per day. They have a really low fleet efficiency, 19 joules per terahash. Part of the reason why their hash cost was so high, as far as I can tell from reading it, that was weighed down by infrastructure capex, I assume, for their AI pivot. So it's a little bit unfair to include that in the hash cost for them because that is a capex that's not going to be used towards Bitcoin mining, but they were still a significant amount of money spent over the quarter on capex expansion for these pivots. And on the note of those pivots, there wasn't too much coming out of Bitfarms with regards to how that's coming along, but they do have 1 gigawatt potential capacity for Pennsylvania, which would be massive. Again, they own coal-fired power plants in the state from the Stronghold acquisition. Right now, they're at about 350 to 410 megawatts of capacity in those facilities. And that is going to be where they put their money in for these AI and HPC pivots. Again, recurring theme, they have not announced an anchor tenant for those sites, but I know I talked to the team while I was at Bitcoin Vegas. They are pretty laser focused on turning those into data centers for this high performance compute, high performance compute loads. So, I personally feel like as long as they can pull off those pivots, this is one of the more interesting stocks to watch because they do own the power assets for those sites. So they will not have to compete with the grid or with other consumers or other data centers for that load if they don't want to. They can obviously sell it into the grid if they want, but I would imagine they would just allocate it towards their own computing. Toss it over to you for second.
Yeah, I'll just go to the Jones note because I thought this was the most interesting thing to add to it. It's all about those like long-term cows, right? Like they brought in their infrastructure that was overseas in South America. They sold that to Hive, and they now have all the power assets here in the United States, specifically Pennsylvania, is where they're going to continue to build out. They also had 2 other catalysts, I'd say, or at least not catalysts, but nice updates. 1, they're doing a share buyback program. And then 2, they did announce recently a partnership with T5 to start building out their sites in Pennsylvania. I think between the 3 of those things, you've seen like a complete repositioning of the company. A year ago, a Bitcoin mining company, they were having problems with their former founder or one of their CEOs. They had a leadership shuffle. They were a Bitcoin miner in Canada, a Bitcoin miner in South America. A year later, they've consolidated. They're looking really strong in this Pennsylvania region. And the share price is honestly like, not to get all super Wall Street on us, but the share price has responded really well since July. It's finally got over that buck. It's always kind of stuck around $1 or maybe a little bit less than that. It's kind of been a joke again in the Bitcoin mining space. Farmer's buck. But we kind of broke out of that, I think, for good reason, because they're making the right moves. Who knows what they get to? They're going to approach it from a PowerShell model, right, where they're going to build out the power assets and assume that the market will fill that with a reliable tenant. I think that's a plausible idea, looking at like the estimates for how much power is going to be needed for these AI HPC builds in the future. And if they can build something solid, it seems like they have they have the capital because they got the funding already lined up. They have this partnership with T5, and like you said, they have the power assets too. So things are looking pretty solid. I think it was a good update from Bitfarms.
Yeah, and a note on the stock price here. This was way down earlier in the quarter, or at the at the end of Q2 and a little bit in July, as Riot tapered off its stake in Bitfarms. So mining pod listeners might remember Riot attempted to take over Bitfarms a year ago. They ended up purchasing up to 19.9% of Bitfarms stock, and they've been shedding that allocation over the last few months as the takeover bid just kind of fell flat on its face. So you've seen its stock price get weighed down. I'm not going to say artificially because Riot is a actor in the market, but those sell-offs and the depositioning from Riot really kind of skewed, I think, the valuation for the company, because there was massive sell pressure for a few months there. Still hold a pretty significant stake, so I know that we're not done seeing. I'm right about that, right? Like, they haven't sold all of it. If I recall correctly, right now it's at like 10%.
Not quite, because we don't know where it starts selling at a certain period. Under that 10% threshold, they don't have to make updates on their sales as much as they did before they had the 10%. There's like a threshold where they don't have to report. So we'll have to look in their quarterlies, I believe, going on, or if they elect to make an announcement about it. But I don't believe going down to from 10% below, they have to make any more updates. So it's possible if they sold the remainder. It's unlikely, though. They were selling in like little slugs of a few million, but it ended up being like, a percent of a percent every time they were selling. I bet they're still unloading it slowly, but I think we've seen the worst of it, because there's going to be a lot less headlines about them selling, given they don't have to disclose it every time now.
Yeah, well, it's under 5% is beneficial ownership. So according to a July 16th update from Riot, they own 9.85%. This is on their website. So we're definitely getting close to that threshold, but still a decent stake. So you could see some more sell pressure weighing down on the stock price.
Awesome. I think that's all I got for Bitfarms, but things looking up for them.
Yeah, let's move on to TeraWulf here real quick. So another miner looking towards AI and HPC. It is the theme. It is the investment thesis and infrastructure play du jour for these Bitcoin miners. Average hash rate at the end of quarter was 12.5 exahashes. Hash rate in a quarter was 12.8, and not really focusing too much on expansion right now as they look towards their AI pivot. Revenue came in at 47.64 million. Cost of revenue at 22.09 million. SG&A came in at 13 million, and hash cost came in at $33.56 per petahash per day. And again, the biggest theme here with TeraWulf is what they're going to be doing with their Lake Mariner site for AI and HPC. So some infrastructure notes there. Not too much with regards to updates on how that build is going, but they do have 72.5 megawatts earmarked for a tenant, Core 42, that they're going to be delivering at Lake Mariner. So that's something to watch as we round out the year and enter 2026.
I put my mic down. Embarrassing. I think the only things I can really say is the podcast that we did with Nas, CTO over TeraWulf, was just pretty repetitive in the sense like there's not always going to be a lot of updates. I think in Twitter we just get used to constant barrages of new updates, especially like around finances. But they're a pretty slow and steady company, right? The only thing that has been the big deal with them this year has been the Core 42 announcement, and that's a huge announcement, so I don't want to get away from that. But they're probably not going to have like a lot more updates. It's just like kind of a slow grind building out these assets that they have. They sold off a few other ones, and they're just focused on building the PowerShell there, and it's looking really good. They're building, I think you said 15 megawatt chunks or slugs, and then build that out, go on to the next one. So I don't have much more. Stock prices done pretty well, as the rest of the AI, HPC, and Bitcoin mining stocks have done well over the last few days.
Yeah, and to your point about timelines and our addiction to news from these companies, these pivots are going to take a long time. If you get it done in 2 years, you're doing it at a pretty rapid clip. So for a lot of these pivots, we're not going to see the fruits of them or substantial infrastructure erected for the next year or so. I think 2026 will be a year to watch over, for what these AI pivots are bringing for these
Looks
companies.
like we're getting some chatter in the comments that the mics are having issues. Might be on my end.
It might be my internet. I don't know if the Penny here says it seems like the video is choppy. So apologies on that, y'all. I will. I'll pray to the Starlink gods for for better internet in the coming weeks. All right, let's round out the show on HUD 8. This is going to be a little bit choppy, and because I did not I didn't look into specifically the American Bitcoin contingent. Now, if y'all remember, American Bitcoin is a wholly owned subsidiary of HUD 8. They shifted all their mining assets to American Bitcoin. They have an 80% stake, and now HUD 8 specifically is going to be focused on infrastructure plays going forward in energy. So they do not have any Bitcoin mining revenue, at least self-mining revenue for the quarter. So I don't have too much with regards to that and what it looks like for American Bitcoin. But just a few numbers for them. HUD 8 pulled 41.3 million. Over the quarter, cost of revenue was 21.78 million, and their SG&A was 22.52 million. Once again, all of their Bitcoin mining capacity has gone to American Bitcoin. But for some updates on the infrastructure front, American Bitcoin got a boost in their hash rate with the 15 exahashes that HUD 8 has online at their Vega site, which was finished in Q2. That's 205 megawatts of capacity. It is outfitted with U3 S21 EXPHs from Bitmain. That's the direct chip liquid cooling model. It's a server rack form factor. So American Bitcoin at least coming hot out of the gate with some leading Bitcoin miners next generation from the S23 EXPHs that HUD 8 has installed at that Vegas site. With regards to other updates, the biggest one I know that you're always looking at, Will, is this River Bend site in Louisiana. They have broken ground on that. They're clearing the site to put down infrastructure. But it seems like in terms of where the company is going, if they can execute on that, that could potentially be a massive site for HPC and AI compute load.
For sure. And we should probably wrap the stream early because I think your Wi-Fi or my Wi-Fi is jumping. It's kind of hard to listen to. But the one thing I want to say with the HUD team is we have the ABTC thing. Interesting to see the renter model kind of be going where ABTC kind of rents rack space from HUD 8. Curious to see how that influences both prospective stock prices and the Louisiana site. I want to see more updates on that. I even made a phone call down to them in Louisiana to see like what's the progress on that. Didn't get any info or find anything out. It seems like the local town is also kind of wondering what's up with it. But it seems like in their quarterly they did provide that they're clearing ground on that. That's next to the Meta campus. A lot of people at the time thought, hey, maybe they're working at Meta. I think they just found a good power deal down there, so they're going to build that out. But I was hoping there'd be more of an update on that for this quarter, but it's probably too early. It's only been 6 months since that story broke.
I think that does it. We'll wrap it up. Apologies for the poor video quality. We'll fine tune this for the next live stream. But if you want to find more information on some of these earnings, you can go to our video feed on YouTube. Go to the live section. We've got earnings calls from Riot, Mara, and CleanSpark. And if you want to look at some of the quarterly earnings in text form, you can go to blockspace.media. We've got some of those up as well. But with that, we will leave you all to it. Enjoy the rest of your day and stay tuned for some awesome pods coming up next week from the Mining Pod and for this week's news roundup.